Good morning, fellow option traders. Or actually, I should say good afternoon because it's now 12:07. It was good morning when I originally started this because this is actually the third take on this video. I should be able to just sit down and do these, but today it's just not working out for me. This is update number 2 and the third video on the November Profit 10 portfolio. And this is our iron condor with our little insurance policy of a calendar that I have down here at 60. You can see how this line doesn't go flat for a while. I have a calendar down here at 60, and I explained why I put that on there in the last video, and we'll actually take a look at it in this video too. Alright, so this is where we would be today with this iron condor. We would be negative 330 delta, or positive 330 delta, sorry about that. Being positive delta means that you really do want the underlying to move up in price. Being negative delta, you really want the underlying to move down in price. Well, the underlying is not, we're positive delta, but the underlying is not moving up in price. We need to do something. And I actually did something last week, but I wanted to show you what it looks like right now if I had not done anything last week. Let's take a look at our chart. Okay, so this over here is a 30-minute chart. This chart is a daily, and this chart is a weekly. Okay, so last week and the week before, on 9/26 and actually 9/25, I started getting a little nervous. 9/26, I was actually pretty nervous, and I was looking at my options. No pun intended. But the following day, it just turned around and went totally in the other direction. But I was looking at some of my studies here. First of all, I was looking at the 50 MA, and this is a 50-period moving average on all charts, on all three charts. They're all set up the same. And this is a 15-day EMA. This is just a simple moving average. This is an EMA. So it's coming up here and banging against this 15 and not really doing anything. Finally it breaks through, and then Friday it comes back down again and wants to kiss it again. Some of my other indicators, the stochastics, was telling me that we came down here and we hit this 20%, moved back up, touched the 80%, and then started coming back down. And this is the fast one, and this is the slow. This is the average of this blue one. And you can see that it started turning. It actually came up and halted on Friday, but the fast one came down on Friday. And Friday was the day where I decided that I was going to make my adjustment. The other thing that made me take heed on that particular Friday was the MACD. And you can see that momentum is starting to build to the upside. And on Thursday it actually broke across the zero line. But then on Friday it just ran out of gas. And historically back here we did have good momentum in this linear run up here. We had good momentum. And then momentum started coming out, kind of a weak recovery there, back down the negative momentum. Then it started building again and couldn't really get anywhere. Came back down, couldn't really fall anywhere. Back up again, then back down hard, and then back up again. And then Friday, this is Friday over here, we started going back down again. I made my adjustment when I saw this 50 MA flattening out here. And I saw the MACD moving average also was starting to fall pretty heavily. So it's just, to me, it was a good time to get out. And I actually did get out, and I was able to make a couple of dollars on the put side when I closed those trades. I bought them back, and I actually bought them back for a little bit less than I paid for them. Let's go to the website quick and take a look at this. Just to let you know, this is my 2012 page, if you haven't been there before. And we come down here to the Profit 10 portfolio for October. And if I click on this, it'll make it bigger. So on 10/5, I did close these. And the one I collected 71, and I bought it back for 57, and I collected 94, and I bought this one back for 85. So after commissions, I actually made $123. Locked and loaded. So happy about that. We'll come back here, take a look at this, and we can, instead of saying show all, let's just say we'll hide the simulations. I'll come back here. I'll slide this over here so we can, so it scales out better. Alright, so right now we're up $707, up $109 today. Market's moving down. We're at almost max profit. Let me just take the calendar off of here so that we can see where we are. Take these two calendars off. Alright, so we're at almost at max profit here. If we continue down today and tomorrow, I'll probably close the call side of this trade, and I'll just hang on to the calendar, because the most I can make is $925. I'm already at $720. That's a pretty good deal for me. I'm pretty happy with that. But the sweet thing is, if things continue to move down, I still have a play. The insurance policy that I paid $121 for, I think, for this insurance policy, which is the calendar down here, and let's just take a look at that by itself. Oops. Alright. So we can see that if the price of the underlying keeps moving down, we stand to make some money off of this calendar, off of our insurance policy. Now, the nice thing about calendars is volatility. Put calendars especially, because as volatility increases, the value of the calendar increases, and usually when volatility goes up, price is going down. So that's a very good thing. Now, we're looking at right now on the Q's IV on the stock of 17.8. So if we were to pump up this look at this 60 put, it's 24, and look at these two 60 puts are way up there, 24 and 23. I like that. They're actually going up. I bet you if I was to go back in time and take a look at this calendar, like on Friday or Thursday, the max profit at the strike of 60 is now 732. I bet you it was probably a little bit less than that. So if we increase volatility, this max profit 723, if we increase volatility by just typing a +5 for volatility here, we go up to $915. And we would be up $92 today at this price. But we'll reset this, bring it back to where we were. Right now we're down $20 on this calendar. But if it keeps going down, we're going to be good. So it looks like this calendar was around $130, $120 was what I paid for this calendar. Alright, let's turn everything back on and come to some sort of conclusion here so you guys don't fall asleep while I'm talking about this. Anyway, like I said, we're up, well, right now we're up $700 on this, and what I will do this week is if things continue to move down and we get closer to max profit on just the call credit spreads, then I will close them. I will buy them back, and I'll just hang on to the calendar and see where we go from there. All right, that's it. Thanks for your time. Thanks for watching. Have a great day and happy trading.